Hey, what's up guys? Leo. Welcome back to the channel. So today we have quite a bit to talk about. We're going to be talking about the broker DeFi rule and how it's looking to be repealed. This is a huge deal for crypto. I cannot emphasize that enough. Next, we're going to be getting into rumors of the Trump administration putting in zero tax on crypto, which another big win. Then we're going to get into Scott Besson's comments about lowering interest rates, which could stimulate the crypto economy through printing of money and lower interest rates. And then we're going to get into the trade war. So let's go ahead and dive in here. So first thing came out, White House supports CRA to rescind the controversial broker rule targeting decentralized finance. So first of all, what is this rule? Well, it essentially forces decentralized finance applications like Uniswap, for example, to report all of their transactions to the IRS. Now, obviously, that's a really big deal for decentralized finance because, well, it's decentralized. It's not meant to have a central company that is gathering information on the people that use this protocol. So obviously this rule is just an attempt to kill the decentralized finance industry. So the fact that the Trump administration came out and currently the status of this is that it's in effect, but he filed an executive order to essentially put everything on hold for review. And so now they've kind of come out and they said, yeah, we're for getting rid of this thing. So they're going to go ahead and move for Congress to go ahead and repeal this so that decentralized finance can flourish within the American economy. Now, getting rid of this regulation, it's also a really big deal because it allows for like banks and big institutions to build out their own decentralized finance platforms where they can capitalize on their DeFi app on a global scale, which expands the dollar's influence through stablecoins all around the world. So that's, I think, another reason that this is being pushed is because the banks want it. The banks see this global opportunity for decentralized finance. They're like, wait a second, we operate within America, but if we build a decentralized application, like, for example, Uniswap or something similar to that, or maybe a lending protocol type of thing, and they're able to reach out and do a global scale with the stable coins, it opens up a lot more doors for profiting for large institutions. So next up we have the rumors are swirling that on the Crypto White House Summit on this Friday that Trump's going to announce a zero capital gains tax on Bitcoin, Ethereum, and other cryptos held in for 1 year or more. So this is obviously a really big deal because it's going to encourage more investment within crypto. Even in the stock market, you don't have zero capital gains tax. So you essentially have this new emerging market, this new industry that you have the chance to make millions of dollars as it's growing in adoption, and it would be all tax-free. So I think this is going to do a few things. It's going to bring in a lot more attention to the crypto industry. It's going to bring in a lot more investment, but also there's a hidden benefit here that I want you all to pay attention to, and talk to your tax advisor about this because, I'm not a tax person. I can't give you tax advice, but I can tell you what I'm going to do is I'm going to raise my cost basis because the way that you're taxed is you're taxed at the difference. So like, let's say that you bought it at $100 and it goes up to $1,000. You're taxed on the $900 difference. The $100 purchase price is called your tax basis. So let's say that he ends up implementing this, and right now it's just rumor, but let's say that it's zero tax. What you don't want to happen is you go 4 years without raising your cost basis. So at the end of his term, let's say that you have a new president come in and they want to suddenly tax crypto. You didn't lock in your tax basis. So let's say that you bought it for $100 and it goes up to $1 million. Well, if you sell it and then immediately rebuy, you would raise your cost basis to $1 million. So now, even if a new administration were to implement taxes on crypto, they wouldn't be able to tax you on that first $1 million gain that you were able to lock in under the 0% tax rule. But again, talk to your tax advisor, make sure that you get properly informed on whatever nuances about this rule might happen. So real quick here on Polymarket, looks like the chance for the US Bitcoin reserve in 2025 has gone up. It's went from 40%, it shot up all the way to 61%, briefly at 65% chance. So that's something interesting to note. So now we're coming over here to Treasury Secretary Scott Bessent says that we are set on bringing interest rates down. Now, what's interesting about this is that Scott, being the Treasury Secretary, he's not actually able to directly lower interest rates himself. That power solely relies on the Federal Reserve. Now, what Scott can do is he kind of can put public pressure by making statements like this about them lowering interest rates, and he can directly work with the Trump administration to force inflation down, because the Federal Reserve has made it very, very clear that they want inflation to come down to 2% before they really start to dramatically look at, cutting rates and stimulating the economy. Because what they don't want to do is stimulate the economy too much and then inflation come back. That's the concern with the Fed. But if we take a look at inflation nowcasting from the Cleveland Fed, who is very accurate at projecting this, we have the projection for March of this year. Their CPI data is coming in at 2.47%. So the latest report that we're going to get just before March is going to be for February, which is 2.8. That's really no change. But so 2.47% is low. We're only a half a percentage point away from their target here. So as we're seeing this trade war scaring markets, and we're seeing pullbacks and whatnot, I expect that inflation is actually going to start coming down much more quickly than the Fed was anticipating, which means that we're going to be in more of a stimulative economy as they begin to cut rates and do more quantitative easing. So this could actually be a type of V-shaped recovery within the market, where as soon as, March, April, May time comes around and we start seeing talk of a lot of rate cuts, the market will bounce back very sharply, very quickly, like we've seen it do in the past. Now, we did see, so today is March 4th, so tariffs did go in effect for Canada and Mexico, and President Trump is threatening that if Governor Trudeau of Canada, because Trudeau said that he's going to raise tariffs on the Americans. And so if that happens, Trump is saying that, well, hey, if you increase tariffs on us by 25%, we're just going to increase tariffs on you by 25%. Now, Canada is not in the best position here to do that, because it's kind of like them shooting themselves in their own foot. It's like, oh, you shot me in the foot, I'm going to shoot you in the foot again. Well, okay, well, if you do that, I'm going to shoot you in the foot again. And it hurts Canada a whole lot more than the United States, because 80% of Canadian goods are exported to the United States. So, you're talking about 80% of their exports coming to America. They can't really afford to continue increasing tariffs on themselves, essentially. If you increase tariffs on American goods in retaliation, you're just going to result in more tariffs being put onto you. So this is, it's unfortunate for the Canadian economy, of course, but it's not a good idea to get into essentially a pissing match with Donald Trump, because he's just going to keep raising tariffs more and more, and it's just going to hurt the Canadian economy, is my opinion. So kind of the outlook for the next few months, in my opinion, is a whole lot of fear and uncertainty. We have a lot going on. We have this trade war starting. We have the declining GDP that we talked about yesterday, with the Atlanta Fed saying that GDP declined to negative 2.8%, which is really not a good idea, or not a good thing, because we have one more quarter of that. That's technically means that we're in a recession. So on the flip side is that I think that what President Trump's trying to do is he's trying to get all of this stuff squared away early on in his presidency. We're also seeing him go and try to settle the war with Ukraine and Russia, which will provide a lot more stability to the market, a lot more comfort and certainty that, okay, World War III is off the table. Nothing bad's about to happen. We have this peace deal going on. So if we're able to get all of this sorted out early on, it could be the next 3 to 6 months are a bit rocky for markets. But as soon as these things start being resolved, then you're going to see a lot more stimulatory effects. You're going to see a lot more confidence within U.S. markets, and we'll start seeing more investments coming in. So it feels like they're laying down the foundation, and fixing the foundation there's going to be some unpleasant bumpiness and uncertainty in the short term, but long term, the house is going to end up being built on a very solid foundation that's going to last for many years to come. But ultimately, we're just going to have to see what happens here. That pretty much wraps up this video. If you have any questions, comments, leave them in the comment section down below. And until next time, y'all take care.